And we're live. Very exciting. Hello there, everyone. Thank you for joining tonight's webinar, Buying Smarter in the Phoenix metro area, what every and returning buyer needs to know in 2025. Looks like my systems are gathering up here. Get everyone is, let's see, we're getting it together. We're getting together. Fantastic. Share my screen with you here. Great. And let the fun begin. Hello, everyone, and welcome. I am Natasha Tomlinson, realtor here in the greater Phoenix metro area, having the privilege of helping home buyers sell and buy real estate since 2005. I've helped starter homes, dream homes, probate transactions, pre-foreclosure situations, and smooth move ups. Well, tonight's webinar is all about navigating the current Arizona real estate market. Okay. Especially if you've owned a home for, pre-pandemic and you're wondering, is now the time to sell? Maybe you're looking to upsize, to downsize, or relocate altogether. Maybe your family has grown up or they've grown out of the house. Maybe you're juggling or what your next steps are. Whatever the case, you're in the right place tonight. Over the next 30 minutes or so, I will break down what you need to sell smart and confidently, even in today's shifting real estate market. So let's start with what's happening in the greater Phoenix real estate market. June 2025. And tonight we will discuss why housing affordability is slowly improving even without those big mortgage rate drops that we keep waiting, hoping, wishing for, and what that means for home buyers and home sellers this summer. So grab your taco and let's dive right in. When we talk about housing affordability, we're really looking at three key factors: mortgage rates, home prices, and income range. So over the years, historically, home prices climbed quickly, incomes didn't keep up with home prices, mortgage rates would drop, help level things out. But in recent years, rates have been a bit more volatile and slow to cooperate. So what's changed? The good news is thanks to rising wages, lower inflation, and stability in home prices, affordability is actually improving on its own. And if mortgage rates dip this summer, like many economists and real estate professionals are saying, are hoping, right? We love to see that because that would really bring a lot of buyers back into the market. We could see a surge in activity. So let's take a moment and talk about what's happening in housing, particularly in Phoenix right now, especially from the builder and the economic side. Because even if you're not building a new home, you're not interested in a new home, it still impacts you if you are in today's market. Builder confidence is slipping a bit, right? So, according to the National Association of Home Builders, confidence among home builders fell again in June. The housing market index dropped to 32, and that's the third lowest it has been since 2012. And here's the key: anything below 50 means builders are seeing more negative than positive conditions. And why is this happening? Well, it comes down to three factors again. It comes down to higher mortgage rates, which are still pricing out many buyers. It comes out to, we talked a lot about tariff concerns in the past, it's still a concern for many, and the rising cost of materials. And it's an issue for labor as well, and the economic uncertainty, which caused buyers to hit that pause button on their plans. Many of you may have done the same thing. This decline in confidence means fewer builders are motivated to start new projects. And in fact, the NAHB, the National Association of Home Builders, is now predicting a drop in single family housing starts this year. That creates a ripple effect that ultimately affects inventory, pricing, and competition for you as a home buyer. Now, housing starts and permits also dipped a bit. So, speaking of starts, after a brief bounce back in April, new home construction fell by almost 10% in May. Most of this was due to a sharp pullback in multi home projects like condos and apartments, because we certainly have enough condos and apartments on the market right now. Single family home construction was basically flat and up just 0.4%. Building permits, which are a signal of future projects, also dipped 2%. So even builders that want to build are hesitating. Everyone is watching the line. The takeaway is supply is falling short of demand. We're seeing an annual pace of 1.26 million homes being built, but we need 1.8 million homes to be built just to keep up with household formation in the United States. So there is still a shortfall, and that shortfall continues to support home values, which leads us to believe that we will not see a huge decline in home prices, especially in areas like the Phoenix metro area. Now, let's talk a little bit about retail sales. What does that say about our economy? Let's zoom out for a moment, look at things at a bit of a macro view. And one of the biggest drivers of our economy is consumer spending. And we like to buy things here in the US. And retail sales, the money that we spend at restaurants, gas stations, supermarket stores, has dropped 0.9% in May. And that's 2 months in a row of declines. People are pulling back on purchases, especially on big ticket items. I know you can't tell if you went to the latest Beyonce concert, but other big ticket items like autos, gas, and building materials. But here's something encouraging. When we remove those more volatile categories, the core spending groups actually rose 0.4%, which is better than anyone really expected. And that's good news overall and may signal that consumers are adjusting and not collapsing. So, the Fed is watching these numbers pretty closely. If spending slows down too much, it could lead to a change in interest rates policy and not the change that we want. Right. So, what does this mean for you as a home buyer? It means that we are in a bit of a transition phase. Builders are pulling back. Inventory may be tight, stabilizing. Let's call it stabilizing. Okay. Wages are increasing, especially in the Phoenix metro area, and inflation has cooled. And that's helped bring affordability back within reach, even with mortgage rates staying relatively high. The bottom line overall, if you're thinking about buying, this is exactly the kind of moment to watch closely. Because if rates drop, and inventory stays where it is, buyer competition, it's going to heat up. So don't wait until everyone jumps back in. Get prepared now. Let's talk some numbers. Again, nationwide, wages grew by 4.3%, while inflation is sitting at just 2.4%. Right here in Phoenix, we saw an impressive 9.3% wage increase when compared to last year, and our local inflation is down to 0.3%. So what does that all mean? You're like, Natasha, yeah, whatever. What does that mean? Arizonans are finally getting to keep more of their income, and that's a game changer and means more future buying power. Phoenix is now entering its eighth month as a buyer's market, balanced in a lot of areas. Prices under 500,000, which make up about over 50% of the homes for sale last month, are down 2.2% when compared to last year. Overall appreciation is flat, up just 1% when compared to last year, which is actually lower than inflation. So while prices aren't crashing, they are certainly leveling out in a healthy way. We did see sales dip in May, and that's largely because, I mean, what was happening in May, right? We had interest rates not go down. We had a lot of talk about tariffs during that time, and that spooked a lot of people short term. So the good news is the buyers are returning. We're seeing an increase in purchase mortgage applications, up 18% compared to last year. And that's the highest it's been over the last 2 years. And that could signal a strong summer. If you're in the luxury space, pay attention. They brought us about. Crypto stock and stock market rebounded. Corporate profits stronger. International exchange rates normalized. All of this led to a 30% increase in contracts, a million plus over the last few weeks. That's rare for me. Okay. When temperatures hit triple digits and luxury demand, it typically slows. Okay. People go to Jackson Hole or wherever they go, but they're not here. Buy real estate if they can afford to somewhere else. At the same time, sellers are starting to step back. New listings are down 39%, and cancellations are up 38%. Expired listings jumped a whopping 84% when compared to last year. Sellers, they're not relisting right away. They're pausing, waiting to see where the chips may fall, maybe renting out their property. And if you're a seller, especially in the luxury range, know this, that June is peak cancellation season traditionally. Okay. Inventory is shrinking faster than buyer demand, and that means your listing could stand out more now than in the fall. For buyers, this summer might be the best window for you. Wages are strong, prices are stable, and we're already seeing more buyers getting back in the game. So whether you're looking to buy, sell, or just stay informed, keep tuning in here. I've got more for you. Whew, that was a mouthful. I gotta take a sip. Now, if you've owned your home for a while, all right, pre-pandemic, 10 plus years, you're likely sitting on a bit of a gold mine, right? You're sitting on a lot of equity. But your home, it may need a little TLC. Let's face it, right? You made it to suit your needs, and a buyer's desires for a home have changed in the last 10 years. So here's what you should be thinking about. All right. What is your home currently worth in today's market? What upgrades or repairs are needed to garner the highest value? And what does it cost to do those those upgrades and repairs? Have you spoken with a tax professional? Have you spoken with a CPA about capital gains tax? And do you plan to buy again? And how will your equity play into that? The key is to plan your sale and your next purchase, and we can certainly do that together. And that brings us to selling and buying at the same time. It can feel like a bit of a high wire act, but with the right strategy, it's completely doable. And here are the main options to consider. You sell your current home and then buy. And this gives you more cash on hand, but can lead to temporary housing needs. Option two, you buy your next home first and then you sell. requires strong financing and potentially a bridge loan. And option three is you close on both homes, the home that you're selling and the home that you're buying on the same day or the next day. That takes strong communication between all parties. It takes coordination as well, and I have done this for many clients over the years. But remember, everything is negotiable in real estate. Contingencies can protect your timeline, and a strategic offer can help you stand out as a buyer while you're still a seller. So we're not advancing. Ah, okay, more water. Mm. Okay, looks like we have a question or two, and I will ask everyone to please keep your questions to the end. We will have a question and answer session for you coming up soon. But thank you for that. A lot of homeowners think that they're not eligible for down payment help, for down payment assistance if they bought a home before, and that's not always true. There are down payment assistance programs available in Arizona that may still apply to you, even if you're not a first-time home buyer. You can also take a look at a few other things like a rate buy down, and that can lower your monthly payment. Look at seller concessions, especially common in today's buyer's market, or possibly a lease back. And that gives you time to move without added pressure. Let's find the right financing for your next home. And I can certainly connect you with a trusted loan officer who specializes in these types of creative strategies. So, what about those who are experiencing hardship and behind on their mortgage? And there are those of you out there. I certainly recognize that. What if you are in pre foreclosure? If you've been behind on your mortgage, facing foreclosure, please, please, please know this. You have options and you are not alone. Here's what we can do for you. You can evaluate your equity today, which is the equity is the difference between what you owe on the home and what today's value is for the home. That difference is called your equity. And you may be able to sell and walk away with cash. Maybe you wanna say, "I don't wanna sell my home. I wanna say this is my forever home." Well, you can explore loan modification and forbearance options. And if you have negative equity, if you happen to have more than one mortgage on there, whatever the scenario may be, where you owe more than what today's market value is on your home, we could consider a short sale, but all of those are better than a foreclosure, in my opinion. Foreclosure stays in your for 7 years and causes all sorts of trouble. Just remember that timing is important. The sooner you reach out, the more options are available to you. So don't wait until you've received that foreclosure notice, that trustee sale notice. I offer confidential consultations, no pressure, no obligation, no judgment. Now, let's get to talking about how your home is seen. The right marketing makes all the difference, especially when we're in a situation where there's more homes for buyers to see. So, your marketing plan should include, my marketing plan includes professional photography and video, drone footage of the home with views and acreage. We want to make sure we're showcasing that, virtual tours, 3D walkthroughs, listing on the MLS, of course, realtor.com, Zillow, Homes.com, and 100 plus other portals, targeted social media ads, email blasts to over 40,000 agents in Arizona, marketing to the EXP agents around the world, over 86,000 EXP agents, in person and virtual tours, and various things to get more exposure to your property. We position your home as one that buyers want to see, not just another house on the market. When the offers start rolling in, don't look at the price. The price is one, but there are a number of other things to review in that offer. We'll review the price, of course, the buyer's financing. Is your financing, is it cash? Are they asking you to be the bank to offer seller financing? Or do they have more traditional financing like VA, FHA, conventional, almost USDA financing? Look at the timeline. Are they can close in 30 days? And is that enough time for you to complete the goal? What contingencies exist? Does the buyer need to sell a house before they purchase your home? Take a look at any other contingencies that may exist. Is this a relocation deal? Are they gainfully employed? Is there a job offer that is pending? Are they requesting, asking for home warranties? It's extended inspection periods, asking for concessions. If we end up in a multiple offer situation, compare all offers and counter accordingly. And if there is one offer, then you accept the best possible terms. And if it's we don't have a meeting of the minds, then wait for a better one. Ultimately, you are in the driver's seat and I am your GPS. So, are you considering making a move in the next 30, 60, 90 days, in the next year? Let's talk strategy. Here's how we move forward. Book a free 15-minute session with me. We review what your needs and wants are, go over a strategy, see what next steps are. Maybe you just wanted the information, fine by me. All right. No obligation, no skin off my back. All right. Maybe you'd like to move forward and have me come over, look at the home, provide a better evaluation of what your home would get in today's market. We can certainly schedule that. And I'll drop a link in the chat. You can find some time in my chat on my calendar to do that. All in all, I thank you for joining me today. I do recognize that your time is valuable and I appreciate you spending with me. I hope that you've learned a little something. Feel free to send me a message or follow me for more weekly tips. I'm here to help you navigate your next move with confidence. Now, selling your home, it's not just a transaction, it's a transition. So let's make it smart, profitable, and stress-free transition for you. Schedule that one-on-one consultation today. Now, let's see what questions have come about. Great. Let's see. What are my financing options if I haven't sold my house yet? Very good question. Very good question. Well, let's see here. There's a number of options for you. We have a few options. One option would be a bridge loan. A bridge loan is temporary financing to help you buy before selling, right? Another option would be a HELOC, home equity line of credit. You tap into your current equity before purchasing the next home. Third option would be gift funds or your 401k. And it's a little less common, but it's certainly an option. And a fourth option would be a contingent offer, where you buy your next home contingent on selling your current. And of course, with all things, we would have to talk to a trusted loan officer about these things to see which best fits your goals and your financial profile. What other questions do we have here? Few, a few different. Uh, what other questions? All right. Here we have one. Can I rent out my current home instead of selling it? Yes. Many homeowners choose to convert their property into a rental for passive income or long term investments. Just keep in mind, you'll need to notify your mortgage lender. It's a good idea. Check with your homeowners association, check your city rental regulations, and consider any tax and insurance implications if you choose to rent versus sell it. Okay, here we go. What is the difference between pre-qualified and pre-approved? Great question, because I know many of you get these pre-qualified letters in the mail, and you're like, okay, great, I'm ready to go shopping. And it's the same thing with the auto loan companies send them out, mortgage companies send them out. They're advertising pieces a lot of times to get you to pick up the phone call to make a move. But pre-qualification is an estimate of what you might qualify for based on a basic financial profile, okay? A pre-approval is a more detailed process where your credit, income, assets have all been evaluated and verified by a lender. Pre-approvals show sellers you are serious and financially ready and able to buy. Okay, that's the difference. Next, will I pay capital gains if I sell my home and move? Well, it depends. Okay, now I am not a tax professional, right? So I'm going to give you a very basic overview. If this is truly important to you, I suggest that you speak with your tax professional, with your CPA, because they have a full picture of your financial profile. Now, if you have lived in your home as your primary residence for at least 2 of the last 5 years, you may be eligible to exclude up to 250,000 in gains if you're single and 500,000 if you are married filing jointly, right? Under the IRS primary residence exclusion. Now, again, always consult your tax professional, your tax advisor about your specific situation. So if you have more than those amounts, single 250,000 gains, 500,000 for married filing jointly, then it's a high likelihood that you will pay capital gain. Hope that answers your question. Woo! Keep them coming. Keep them coming. What other real estate questions do you have for me? Okay, you're hearing that it's about a balanced market. You hear balanced market, buyer's market, seller's market. What's the okay? Well, a balanced market is when there's roughly the same number of buyers and sellers. Neither side has a major advantage. So a seller's market is where there'll be more sellers than buyers in the market. And yes, a buyer's market is when there are more buyers in the marketplace, okay? I think I just messed that up, actually. Buyer's market is where we have more inventory, not enough, buyers. Seller's market is where we don't have enough inventory for all the buyers that are looking. And so for sellers in a balanced market, pricing and condition matter greatly, okay? For buyers, there may be less competition and some more room to negotiate. So in a balanced market and in a buyer's market, the boilerplate language in the contract typically takes place, right? You have your inspection periods, you have your appraisal, you have document reviews. In a seller's market, a strong seller's market, what we have found is a lot of those things tend to be way before the timelines um, shortened. And that can work out well, it can be problematic. It's more of a level playing field in a balanced market is what I would say. Great. Well, that looks like all the questions that we have this evening, folks. I promise to keep it short and sweet, and here we are. Again, I thank you very much for chiming in tonight. I thank you. I know it's valuable, and I hope that you learned a little something today. Feel free, I will in the description here, I will include the link to my calendar so you can schedule that free 15-minute call. I look forward to seeing you there. Ta-ta for now.